Very pleased with the organic growth performance in 2018, in particular the strong second half and the strong fourth quarter. This was driven for us by strong performance in our two largest country markets, the United States and China, and also in our infant nutrition business. When it comes to our portfolio mix between us and Unilever, it's slightly different. As you know, we're more focused on food and beverage. We're not that much into personal care, so market conditions may vary.
And you mentioned China, one of the big drivers of this strength. You're seeing no signs of weakness in the Chinese consumer market.
Overall, we've seen slowing GDP numbers, or GDP growth numbers, but that has not translated into slowing consumer interest. We also, coming out of a period of some underperformance in China over the past few years, we have made significant recoveries in 2017, 2018. So I think that was a stronger effect and led to this overall increase.
And in terms of your guidance, you have guided to improved organic sales growth and margin toward those 2020 targets. On the margin side, that's 17.5% to 18.5%. Could we see you hit that target in 2019?
The target is the target, so that's for 2020. But I think we've seen now very solid progress coming out of 2017 and 2018. So I think there's generally a lot of confidence in the market that we'll make that target.
And what specifically will you be doing to bridge the gap between where you are now, 17% margins, and that 17.5 plus?
Pretty much a continuation of what we have been doing already, and that is a very disciplined review of our structural costs and doing that in ways that it doesn't affect our organic growth performance. And I think we've been pulling this off beautifully in 2018.
Anyway, 2018 was largely driven by volumes. You did achieve some pricing, but not as much. And Givaudan, the world's largest flavor and fragrance company, they came out at their full year and said that they are continuing to try to increase costs, continuing to try to push pricing through. So how much pricing do you think you'll actually be able to achieve in 2019 against this backdrop?
You're right, for the full year, pricing was somewhat muted, but I think it accelerated towards the end of the year, and that gives us confidence now for 2019. That's not only important for organic growth, but also for our gross margin, because we are seeing input cost increases across the board, energy, or what you're saying, you know, some of our key suppliers, labor cost in some markets. So we have to pass this on to protect our gross margin, and hence, while our real internal growth, which is our speak for volume and mix, is always going to be leading, we hope that pricing will improve in 2019.
So we should expect to see more than 0.5% pricing increase in 2019?
Yes.
And in terms of the confectionery business, you've already made some big strategic decisions there to exit your U.S. confectionery business, but it is still a part of your overall group. We saw a cut in guidance from Lindt earlier this year. Shares there dropped. So some slowing demand continues in the chocolate space. What are you seeing in terms of slowdown in confectionery, and does this mean that we could see an acceleration in further moves away from this space?
So I think conditions may vary between different companies. What we are seeing, especially after the retreat from the United States and the focus on other key markets, we have put a whole lot of effort into rejuvenating our product program, and that's clearly paying off. And so no matter what the overall market growth numbers are, I think we're back to gaining share again in some key markets and across key confectionery subcategories. And that's given me good hope for 2019 and beyond. So we have no plans here for further portfolio adjustments in confectionery. We want to win in confectionery.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.